Welcome to The Explainer. You know that feeling, right? Staring at charts, hunting for that one magical setup that's going to change everything, but we're completely flipping the script today. We are diving into a curated library of resources to reveal a really profound truth about the markets. Your edge isn't the indicator you use. It's literally you.
This quote from Tradeciety just hits the nail right on the head. You see, there is a staggering 90% failure rate among new traders, 9 out of 10. And a huge reason for that is they get completely stuck in what we call the indicator trap. You know the type? Endlessly searching for the perfect algorithmic setup or the magic moving average. But honestly, as our source material continually emphasizes, none of that matters if you can't nail the boring stuff: emotional stability, risk management, and consistency. The tool is just a piece of glass. You are the one actually pulling the trigger.
So, to break out of that trap, we're going to climb what we call the ladder of mastery. First up, beginner mindset. Then, timeless price action. Moving on to elite psychology, institutional flow, and finally, the ultimate book.
Let's start right at level 1, beginner mindset, looking at the international bestseller Always Free by Jason Graystone.
You've really got to look at the stark contrast here. On the left side, we've got the classic amateur expectation, the get-rich-quick scheme. This is exactly what lures 90% of people into the markets, chasing fast money, dreaming of impossible monthly returns. But then, look at Graystone's reality on the right, treating trading as a business of freedom. Professional trading actually requires strict accountability. It requires realistic goals. You have to understand that your mindset absolutely must come first if you want long-term success. Basically, if you don't treat this like a real business, the market is just going to treat you like a gambler.
All right, moving up to level 2, timeless price action and the principles of Jesse Livermore. Even in today's crazy world of AI-driven algorithmic markets, our sources point back to 23 timeless rules from Jesse Livermore that still apply perfectly today. Why? Because human nature simply hasn't changed. One of Livermore's biggest warnings is about what he calls action bias. It's that nagging feeling that you always need to be doing something, always clicking a button to feel like you're making money. He taught the immense, profound power of just waiting. Look at that final point. The absolute smallest mistakes, like jumping into a trade just a few minutes early because you have FOMO, those have the absolute biggest financial consequences. And this table really brilliantly breaks down Livermore's whole philosophy. Amateurs, they try to predict the market. They're constantly guessing what's going to happen next, driven entirely by their ego and anticipation. But the pros, they are simply reading the market. They just observe what is actually showing up on the chart in front of them. Their actions are driven by patience and confirmation. They aren't predicting, they're just reacting to confirmed data.
Let's level up again to Section 3, Elite Psychology, focusing on Ari Kiev and Market Wizards concepts.
I want you to think about psychiatrist Ari Kiev's concept of intellectual failure. It's basically a human glitch. We see this all the time. You have these highly intelligent professionals, doctors, engineers, lawyers, they come into the markets and they just fail miserably. Why is that? Well, they're used to being the smartest person in the room, so they try to outsmart the market instead of mastering their own emotional control. Newsflash, the market literally doesn't care about your IQ. It only cares about your discipline.
To really hammer this home, our sources look at Kiev's work with SAC Capital, a massive hedge fund. This case study is wild because it proves that without emotional control, even the smartest, most highly paid hedge fund analysts on the planet are going to lose money. Being a brilliant data analyst is completely useless if you end up panicking and selling at the absolute bottom just because you couldn't handle the psychological pressure.
Which ties right into what Jack Schwager talks about in his famous Market Wizards interviews. Amateurs completely obsess over their win rate. They want to be right 80 or 90% of the time, just to stroke their own ego. But the top 1% of traders, they're focusing on the boring stuff: consistency, risk management, and statistical expectancy. They know that if their risk-to-reward ratio is high enough, they can actually lose the majority of their trades and still come out highly profitable at the end of the day.
Okay, on to Section 4, Institutional Flow, where we dive into advanced supply, demand, and order flow. So since the biggest banks and institutions are the ones actually moving the market, specialists want to trade right alongside them. And here's exactly how they find institutional fair value. Step 1, they link their technical analysis to auction market theory. Step 2, they analyze volume profile and order flow to see where the heavy money is really sitting. And step 3, they identify institutional imbalances to pinpoint that one precise supply or demand zone that actually works, completely filtering out all that retail market noise.
But hey, order flow isn't just some modern, high-tech invention.
Our sources dive into historical texts like The Rice Trader's Secrets. Get this, Munehisa Homa, the guy who literally invented the candlestick chart back in the 18th century, developed reversal methods for trading rice that are still being used by professional day traders and scalpers right now. It just proves that while our technology changes, human psychology and the resulting price action, it stays exactly the same.
And finally, we reach Section 5, the ultimate book, authored by you. I really want you to stop and ask yourself this question right now. Out of all the thousands of books out there on strategies, algorithms, and market wizards, what do you think is the single most important trading book ever written? Keep in mind everything we just talked about regarding mastering yourself. The answer? Your very own trading journal. That is the ultimate twist here. You are the author of the most important book you'll ever read. Using tools like EdgeWonk or EdgeFlow, these aren't just for logging how much money you made, they act as the ultimate referee, the ultimate truth teller for your specific journey. Your journal holds a mirror right up to your own emotional glitches, your specific action biases, your statistical expectancy. It tells you exactly where you're failing and exactly what you need to fix. Honestly, without it, you are flying completely blind. I want to leave you with this incredibly provocative thought from Stick Trader. The market will always exist. The only real question is whether you can survive in it. The market isn't out to get you guys. It is just a mirror reflecting your own discipline, patience, and emotional control right back at you. So, after walking through this library, the real question is, are you finally ready to stop obsessing over the perfect tool and start mastering yourself? Thanks so much for watching this explainer, and we'll catch you next time.